Worst case scenario, we're going to get out at break even. So we're sitting in a very solid position going into next week. All right, hello again, everybody. This is Mike Rixey with NetPicks, and in today's video, I want to take a look at where we close the week. Is the low in? Is the market giving us the green light to jump back in? It's a question that I have had come in multiple times this week from members and customers. So I want to take a look at some of the technicals that we're tracking going into next week. It is a big week next week for news. We have a lot of the big tech stocks releasing their quarterly numbers. Apple, Amazon, Microsoft. You go down through the list, the next week and a half is huge. All those big companies will be releasing their earnings numbers. That has a big impact on the market as a whole. Those index products are heavily driven by what those tech stocks do. So very much setting up to be another active week for us next week. But as we wrap up this current week, you can take a look at the daily chart of SPY. This is the S&P 500 ETF, and it was an impressive stand by the bulls this week. You can see that we went from down around 508 at the lows to start the week. We just closed the week above 550. That is an impressive move, no doubt about it. And you can see the size of these candles remain impressive. If you take a look at the ATR down at the bottom, we're looking at an average range of above 16. That's still a very active market. Now, next areas of resistance to keep an eye on here. Let's take a look above us. The next area that I will be tracking is the 555.50 level. That's the 50-period EMA on this daily chart. That could come into play in a hurry next week. So now the question becomes, is the bottom in place? Well, we have to take a look at what's happened. The market has been very volatile in reaction to all of the tariff uncertainty. Has any of that changed? Do we have clarity? Do we have any trade deals being announced yet? We don't. We're going to continue to see that uncertainty priced in. I wouldn't be surprised if we get another wave to the downside over the next few weeks. A lot of it's just going to depend on earnings next week and whether we get any type of surprise headline to be released on the tariff situation. If it's a Trump tweet, obviously we can't predict that, right? From a technical perspective, it looks like the market may want to make one more push to the upside to start the week next week. I'll take a look at the 130-minute chart in just a second. I'll show you some levels there on a shorter time frame. But I wouldn't be surprised if we get one more push to the upside before the markets start to stall out again and give us another wave lower. Here's some of my concern on this move to the upside. Number one, take a look at volume down at the bottom. We have definitely seen a contraction in volume. The move to the upside, it's been impressive price-wise, but it really hasn't been led by a lot of volume. Right, if you take a look today, we've had 55 million shares trade on SPY. It's well off the pace from a few weeks ago. We're just not seeing that conviction yet, and it makes sense. There's still a lot of skepticism out there. That move to the downside a few weeks ago definitely caused a spike in fear, and there's some skepticism from people, whether it's time to get back in or not. So we'll see if that volume starts to uptick. The ATR, I would still like to see that ATR contract. I would still like to see it back closer to single digits. It's going to take some time. It'll probably take a number of weeks to get back down there, but I would like to see the ATR settle back down. Look at the VIX. The VIX trading at 25 going into the weekend. We've definitely seen volatility contract. It's still elevated compared to historic levels, but we've definitely seen the VIX come from up around 60 a few weeks ago down to 25. So we've definitely seen that fear come in a little bit. And that's a good thing for options traders like us. It's still active, but we're not seeing the extreme volatilities being priced into the options. Options aren't near as expensive as what they were just 2 weeks ago. That's a good thing. So on the upside, that 50-period EMA up above us, 555.50, will be an area to watch on the upside. And then on the downside, should we roll back over, we have this support cluster here on the daily chart. We've got that cluster between 539.15 and 534.60. You've got the 20-period EMA, the 20-period SMA, and the 8-period EMA. Those will all be areas to watch should we roll back over to the downside next week. Now let's bring this over to the 130-minute time frame, and we're going to take a look at our Options Swing Trader Pro program. Here's the beauty of having a system in place with a very specific rule set. We're very disciplined in what we're looking for. It's either a setup or it's not. How do I know that? Because look at the green dots here on my chart. We have our trade calculator that's plotting the entries, the targets, and the stops for us in real time. If I take a look at this chart of SPY and then drag my data box over, you can see that our entry point earlier this week was at 533.45. Very crystal clear where the entry point's at. Our target 1, 547.34. Target 2, 559.24. And our initial stop was at 513.83. Once that long setup triggered in, we came in and we bought a long call. Let me just grab my trade journal here a second. We went into the 535 calls. A little bit expensive. We went out to the May 9 cycle, paid just under $14 or just under $1,400 per contract, $1,382 to be exact. So we put on a bullish position looking for a move to the upside. You can see where we ended the week. We did come up and hit that first target. We have a couple of options there. First, everybody should be moving stops to break even. We're going to reduce the risk. We've hit that first target. The market's made a nice move. We're going to go ahead and reduce the risk, take the risk off the trade. If you've got multiple contracts on, you can also peel part of your position off here. If you did that right at the close today, you're looking at around a $618 profit. That's a 45% return for us in 2 days. That's a big return. That's a really nice move. What are we expecting out of this trade? I would love to see us hit full target. That second target up at 559.24. We would need one more push to the upside next week. We just took a look at the daily chart. You can see on this 130-minute chart, it's looking bullish here, right? The bulls have been in control here the last few days, really for most of this week. And we'll see if they follow through. Any type of positive news out over the weekend, and we could be at that target level next week. And the best part about this is we've taken the risk off. Right? Worst case scenario, we're going to get out at break even. So we're sitting in a very solid position going into next week. So my question when I started the video, is the bottom in? Is it safe to jump in? Well, the nice part about having a 130-minute system like this, I'm looking for what's going to happen over the next 1 to 5 days. That's a very typical holding time for us. I'm not trying to predict if the bottom is in and we're going to rally higher for the next 4 or 5 months. That's just too hard to predict. We're looking at what's going to happen over the next few days. We're in a bullish trade right now. I wouldn't be opposed if we flip right back over to the downside next week. I wouldn't be opposed to jumping right into a bearish position. Right? Does not matter to me what happens. If the market moves up, down, sideways, there's always something we can do. Right now, in the near term, I would like to see one more push to the upside on SPY. Now, I want to take a look at one more market here before we wrap up the video. This is USO. This is the oil ETF that we like to track. We just opened up this position with our members this afternoon, and let's take a look at what went into that trade because it's a good example of why it's important to have that system in place. I know I keep going back to this, but it's so important. It's the missing piece for so many retail traders. If you don't have that roadmap to follow, you're left trading off of emotion. And when you take a look at a chart like this, if I were to block that calculator, let me just cover it up here a second. If all I'm doing is looking at price action, really hard to form an opinion on whether you should be bullish or bearish. It just looks really, really choppy, right? But because we have the calculator there, we have that roadmap, I can see that the system already triggered into a long trade. And this happened last week. Entry point 68.47, target 1 70.02, target 2 71.35, and the stop at 66.10. Everything's outlined for us there. And we came in today and actually initiated the position late. We got on board this trade late. Why would I get into a trade that's moving sideways? Because out of this pattern, this is what we call the coiled spring pattern. We know that USO, the energy products, like to stay active. It's been sideways. We're building energy. That coiled spring, that pattern, it's building energy for the next move. It's a spring getting tighter and tighter. At some point, that spring's going to want to pop. We don't know when that's going to happen. We don't know which direction it's going to happen in, but when it pops, it's going to provide a nice move. Now, our bet is that pop's going to happen to the upside, and it's going to happen very quickly. If we get that pop, we could get a nice push to the upside, and I'm not looking for a record-breaking move. We're just looking for a move up to 71.35. So what we did here this afternoon, we came in and we bought the 69 calls, and let me pop this up on the trade page a second. We went to the 69 calls, and we went out to the monthly cycle, and we went out to June. We went out 56 days. Let me scroll down here so we can see it. We went to the 69 calls. We put this position on for $4.20. $420 per contract on this position. That's the most I can lose on the trade. It's a fully risk-defined trade. I'm most definitely looking for a move to the upside. Went out a little bit further in time. In most cases, we're going out 10 to 20 days with our swing positions. I went out 56 days here, just given that we've been in a sideways pattern. We just don't know how long that pattern is going to remain sideways. So I wanted to give ourselves a little bit more time here where we can give the trade more time to move in our favor without that time decay adding up and crushing us. So we went into the 69 calls. Again, $4.20. We've got a small profit on the table already. And then if we go back over to that chart, we'd be looking for a push to the upside going into next week. So we'll see if we can get a push and close the trade out on both USO and SPY. It'd be really nice if we can get a higher open to start the week, and then we'll see how earnings perform next week on many of the tech stocks. So if you have any questions on the trades that we've talked about today, feel free to post a comment on the video. We also, if you're interested in the Options Swing Trader Pro program, it's a phenomenal program that's really guiding all my decisions on a daily basis. There's a link to a video in the description of the video. You can go ahead and click on that link. It'll show you in more detail how the Options Swing Trader Pro works. You can take a look at how you can gain access to it here over the next few days. It's a great time to get started in the markets. Markets are just ideal for options traders. So we'd love to have you join our team. Take a look at the video. Let us know if you have any questions, and I'll be back with you guys next week for our next video.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPic's full risk disclaimer and privacy policy.